Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair. We'll go with USD. And as usual, we will be talking about fundamental analysis before we move right down ahead to technical analysis, which is really what we're going to be seeing on the chart. We have noticed an up and down movement from the safe haven, and the gold price remains stuck in a familiar range of about $1,940 per ounce, lacking a clear direction, as you can see. And as treasury yields firm up on hawkish federation while the Russia-Ukraine crisis rages on, and gold bulls to face an uphill battle amidst hawkish Fed Ukraine saga. And the outlook for this, we are believing that the Russian-Ukraine standoff and gold price is struggling to find a clear direction. And the bright metal continues to gyrate in a $20 narrow range so far this week, looking for a decisive break in either direction. Fed Chair Jerome Powell remains confident on the US economy, backing a 50 BPS rate hike in May. The aggressive Fed's tightening plans have pushed the US Treasury yields through the roof and has been capping gold's upside. Meanwhile, increased Russian hostilities on Ukraine and the stalemate on the peace talks keep the downside cushioned in a gold price. So we are expecting gold price forecast XAU USD to offset Fed rate hikes by virtue of safe haven demand. And gold price key levels to watch. The technical conferences detector shows that gold price is extending declines to test the pivot point on a one-day S1 at $1,923 per ounce. And an acceptance below that level will call on sellers to target strong support at $1,918 per ounce, which is convergence of the Fibonacci 23.6%, 1 week the previous day low, and Bollinger Band 4-hour lower. And if the sell-off intensifies, then a sharp drop towards the confluence of the SMA 200 4 hours and the pivot point one-day S2 at 1,1909. And also 1 month high of $1,904 per ounce would be a level to beat for all gold bears. And alternatively, if the bull jumps up back into the game, then immediate resistance is seen at $1,926 per ounce. And the Fibonacci 61.8% one day proves that a further up gold boost will need to find a strong foothold above a dense cluster of resistance levels around $1,931 per ounce, and the level compromises of the SMA 5 1 day and SMA 10 4 hour, Fibonacci 38.2% 1 day and 1 week. And now the next powerful upside barrier is that of Fibonacci 26.3% 1 day, where the $1,936 level aligns, and the previous day's high of what the $1,941 will be next on buyers' radars on a sustained move higher. So what should we be expecting from this is retracement back to this most recent resistance zone, and then a possible push up back to the 2,000 per ounce zone. So if we're to make an entry at this point and let our trade run up to this point, we're looking at nothing less than 275 pips, and an extension to this, we're looking at about 700 plus 800 plus thereabout pips from this trade, which is good money, of course. That's our technical analysis on today's currency pair, XAU USD. Remain your host, Neil. Bye for now. Also, furthermore, today we'll be looking on commodities, Nike, and we have noticed that reported on Monday third quarter earnings that the beat analysts focused on renewed the top expectations about Nike, announced an earnings per share of about 7 cents on revenue of $10.87 billion, and analysts have pulled by anticipated EPS of 71 cents on revenue of $10.63 billion. Nike shares are down about 21%, and from the beginning of the year, still down about 27.40% from its 52-week high of $179 point set on November 5th. And they are underperforming the S&P Global 100, which is down about 5.02% from the start of the year. We can notice that Nike shares has gained about, let's say, 5.81% in the last few hours, and the trade following the report, and Nike follows other major customers discretionary sector earnings this month, as reports of Nike following an earning beat by a Home Depot of February 22, who reported EPS of $3.21 on a revenue of $35.72 billion, compared to forecast EPS of $3.18 on the revenue of $34.88 billion. And Alibaba ADR had beat expectations on February 24th, with third quarter EPS of $16.87 on revenue of $242.58 billion, compared to the forecast. And for EPS, we are noticing $15.93 on a revenue of about $246.3 billion. So the start of the date on all the upcoming earning reports by visiting has been pushing the Nike commodity to the upside, most likely to recover what has been lost. So we're looking at a much more required move to the 139 zone and the 140 zones. So from this point, we're looking at an entry at this point and an extension to the 137 zones and more to the 142 zones. So at this point, 72 pips and an extension about 100 pips from that entry point, which is good money. That's our technical analysis on today's commodity, Nike. I remain your host, Nick. Bye for now.